Simon, welcome back. We've got some big news to cover today.
It is big news kind of day. Let's jump into it.
Yeah, so Klarna, in case you missed it, they have decided to pull forward their IPO. It's going to be $1 billion plus offering. Why don't you walk us through why you think this is a big comeback story, and then we'll unpack what does this mean for the other companies that are thinking about fintech IPOs? What does this mean for the market? What does this mean for AI? There's a lot of other things that this could set the tone for.
This, to me, is the $15 billion comeback story if the pricing that Bloomberg has reported is correct. And it could be as soon as next week, although that article also said it could be probably like a mid-April timeframe. So the reports from Bloomberg say that they're going to list on the New York Stock Exchange for around $15 billion, and as you say, priced at $1 billion. But don't forget, this is the company that took the mother of all down rounds. They were once valued at $42.5 billion, and then just 12, 18 months later, their valuation dropped to $6.7 billion. Oh. And this was all as they were entering the US market and wildly unprofitable and didn't look like they had a good future ahead of them. So here they are, coming to IPO, and the last reports that we have from October 2024 look like they were approaching month-on-month profitability. So over the 12 months before then, they had received, they'd achieved something like $180,000 net loss, so very close to break even. And they'd received a valuation from a secondary investor of around 14.6. So all of this tracks. But what do you think?
Yeah, it's a crazy comeback story. To go back even farther, they got started with very little investment capital, were profitable in Europe for a long time and kind of under the radar, then surged on the scene, raised a lot of money, entered the U.S. market, started burning capital, took a massive down round. But this is another thing we've talked about with respect to their founder, Sebastian, is that he's a master, I think, of market timing and of narrative timing. He was early on the AI kind of hype within fintech, saying, hey, I'm going to lay off half of my customer service folks, or not I'm not going to lay them off. I'm going to obviate the need for them and let them go away naturally through attrition because I can automate their work. And he's also done some other stuff around being. Why don't you talk through maybe some of the other narratives he's really leaned into from a timing perspective?
So the biggest headline was they've ripped out Salesforce and Workday because they don't need it because AI. And this absolutely shocked the world. And only very, very recently had people come out and said, no, that can't be quite right. And he's now come out and taken to Twitter and said, we did actually take Salesforce out, but Salesforce is going to be just fine, and Workday is going to be just fine, because we had to do a lot of hard work. We had to build an internal graph database. We worked with all of these companies, and actually that tweet's fascinating, because it's like a playbook for how to do AI really, really well. So that is a really interesting model. The other thing he did recently is put out a tweet.
So good marketing, but also there is substance behind the marketing.
Without question, there's a substance there. He's got a glint in his eye and a wink whenever he's doing social. Possibly the classic example of this is what he said about crypto recently. It's something like, screw it, we're going to get into crypto after all. And this was right around the time that crypto's reaching its market top and is kind of hitting all-time highs. And he'd been the refusenik on crypto. He didn't want to get kind of involved, and he read the mood music and managed to get all of that attention. Where's it going? It's going to Klarna, and it's going to him and his brand. So he's kind of finding that line really, really well. And the company behind him is performing. And this is a smaller company, but it's one that seems to be really, really delivering and executing. So BNPL could be here to stay.
Yeah. And it sounds like we're being a little critical, I think, we're saying, he's the master of marketing, master of timing. If you're building a company, timing is so hugely important. If you're building a company, marketing is so hugely important, especially if you're a consumer brand, especially if you want to be one of the first companies to ride into the IPO window. And so I think, this is good for him. And I'm not surprised that, you look at the roster of IPO candidates, of all the ones to be aggressive about trying to pull the timeline forward and catch this wave, I'm not surprised that it's Klarna.
founder-led, CEO-led marketing is extremely effective because more than ever, we buy from personas and personalities, and that's how you get attention. So that completely makes sense. And your timing point is a really good one because consider where we are in macro right now. Consider that maybe end of 2024, Nvidia was at its peak stock price. We were at the peak of the AI hype. Everybody was really excited. And then DeepSeek happened. And suddenly confidence kind of got rocked. And then we see announcements about tariffs. And then we see that Warren Buffett has sold almost entirely into cash. And then we see that inflation is making a comeback. So if you are going to get to the public markets and you are going to get a good price for your stock, the time is now. So I suspect we might see a bit of a rush. And who do you think is going to be next? Like, who's going to come to the market?
Yeah, and to back up, 2021, the IPO window opened, but a lot of people missed it. And so if you're Klarna and you've been a private company now for 15, 16 years, you don't want to miss the second window. And so that is, I think, the big question, which is how do other IPO candidates react to this? Do they say, hey, I don't want to miss that window? I need to pull forward my plans. There is a lot of macroeconomic uncertainty around tariffs, around inflation, around the deficit, some other things too, global conflict. And so you've got to kind of figure out, it's like, do you want to be early? It's worse to be late. Markets don't move, or, an IPO timeline doesn't, pivot on a dime though. So where are these other folks going to decide? The big ones in fintech are probably Chime and eToro are the two main ones. There are a bunch of other ones who are kind of a little bit farther back.
Yeah, there's rumors about Plaid as well, and whether they're going to go this year or next year, we just don't know. They've obviously not said anything publicly, but they have done sort of a couple of Forbes piece, starting to tell that story a little bit. But if I was a founder looking at the next 12 months, I'd be trying to pull that timeline forward, even if it hurt to do so, because it feels like it's very soon, or it's in 5 years' time, and how are you going to get to that 5 years' time from here? Like that's the big question. Unless, of course, you're Stripe, in which case they just seem to have absolutely no interest in IPOing whatsoever. Very, very different kind of companies there, and the private markets are still full of companies like that.
You just interviewed John Collison from Stripe about their annual letter, and I think one of those questions was, when are you going to IPO? And he says, I really have no interest in it. I don't want to be asked by a 25-year-old analyst about CapEx, blah, blah, blah. And I was like, I guess he really doesn't like the idea of going public.
Well, and it's interesting that Klarna is going for the New York Stock Exchange, if these reports are to be believed. And the New York Stock Exchange is very different to the NASDAQ. The NASDAQ index is the tech company index, and that's where their biggest competitor, Affirm, is listed. They're seen as a tech company that does finance, and that's not a bad thing. They've kind of achieved that. I think Robinhood might be on NASDAQ as well, if I'm not mistaken. So these are very different to New York Stock Exchange listed banks. But, of course, in its home country, Klarna is a bank. So maybe it's signaling something here. Like, why the New York Stock Exchange? And, maybe they got a heck of a listing deal from the New York Stock Exchange, who are trying to win more tech companies. There could be some stuff that we don't know about that's not in the public domain. But what are they saying with the New York Stock Exchange, if that's true, if that tracks?
Yeah. And this is also a narrower part of a bigger, broader question, which is, do all the European tech companies decide to list in the U.S.? Revolut just announced $1 billion in profits. There's been talk, will they do a UK listing? Will they list in the U.S.?
Well, so Nick Storonsky was on the Harry Stebbings 20-Minute VC podcast, where he said it would be bad for my shareholders. It would be bad for them to do that. Like, I have a responsibility to my shareholders to not do a bad thing. And
How long ago was that podcast?
I want to say 6 months
weeks,
ago.
right?
Maybe, yeah, it's within the last 6 months, maybe even the last 3 months. And, you got to be thinking they're considering it. They have a banking license in the UK. They have a European-wide one. They have one in Mexico. They're starting to get live in, I think, Brazil with a banking license. This is a company that's really expanding. They're sort of new bank everywhere but Brazil. And they are the second biggest brand, you would argue, not the second biggest neobank, but certainly the second biggest brand in that space. There would be potentially a lot of investor appetite for something like that on the NASDAQ because people have heard of it. it pains me to say this, but unless the UK can do something really special in the next 12 months, they're going to miss all of these IPO candidates. Like Monzo's quite a bit smaller, but another brand that is known. Why would they list in the UK? I think that if out of anybody, they might, but I don't think Revolut would. ARM, the chip manufacturer, the Cambridge-based company listed in the US. What is fascinating, though, is there's kind of a model emerging where you have your top co in the UK, but you list in the United States. So Klarna has its top co in the UK. I think Nubank now has its top co in the UK. Revolut does, of course, but they're listed as or potentially to be listed in the United States. And the reason you have your top co in the UK is so that you're subject to English law, and English law is generally considered more fair than American law, which is considered a little bit litigious.
We'll let that one pass. I think another point, though, around Klarna and actually back up here. I was pretty aligned that Klarna and other folks would choose to list in the U.S., but I saw something from Klarna's CFO just a week or two ago saying companies tend to do best when they list in their biggest markets, which I thought was interesting. And right now, the U.S. is not their biggest market. I believe it's UK, and then, although you may not define. So it seems like there's some tension. Maybe Nick is also trying to get some concessions in terms of thinking about where he lists, but usually the obvious choice is the best.
Revolut has been trying to crack the US for a long time and never bet against Revolut. I suspect they will get there. And I also suspect they'll be quite big in the Americas broadly. They are very much a global brand. They're clearly much larger by users and current revenue in Europe, but by sort of growth rates, some of their emerging markets teams are absolutely crushing. So maybe that looks different in 2 years' time, 3 years' time. But, is the IPO window open in 2 years, 3 years' time, or will Revolut try and rush to make it happen? That's a very good question. They're a puzzle in so many ways. I cannot figure out Revolut.
I will say another thing that's been in the headlines recently is a bunch of companies doing late-stage private rounds. Stripe did a tender, and a tender is when early employees and investors have their shares bought by other investors. And so usually if people need liquidity, employees, early investors, you have to get M&A, you have to have an IPO. But if you can just have late-stage markets do these large tenders. So Stripe did one at $85 billion. Plaid is rumored to be doing one at about $5 billion. Mercury just did a $3 billion round led by Sequoia. That wasn't a tender. It's possible there was some secondary involved in that for some of the early folks, but Mercury is a much younger company than
don't forget Ramp
so
as
the
well.
Pressure. Oh, yeah. I missed the bigger one, Ramp, which was at a $13 billion valuation. And so some of the pressure that used to be there to try and catch these windows is attenuated pretty significantly.
I think Brex has also been reported, it might have been by The Information or TechCrunch, I can't remember who, so forgive me, reporter, whoever it was, to have done a tender offer at around a certain size. I can't remember exactly what it was, but that the reporting also said they're on track for about 500 million in revenue. I think Ramp came out publicly and said they're tracking to 700 million in revenue. So these are companies with meaningful revenue numbers, kind of approaching that billion mark on the revenue side, and also kind of nothing in the scale of the JP Morgans and the Amexes of the world. I think Amex is at the 69 billion or 63 billion, something like that. But if they can sustain their growth rates, then it starts to get very big very, very quickly. And I would point you to Stripe and Adyen and the growth in total processed volume that those guys had in the last sort of 10 years from a compounding rate versus some of the incumbent payments processors. And they are now, in the top 3 or 4 themselves, and they're keeping those growth rates up at that compounding level. And that, if you wind the clock out 10 years, starts to make the market look very, very different. So again, all of this plays into potential IPO narratives.
And correct me if I'm wrong, but I think this is the narrative most founders who are thinking about IPO are kind of working through their head. So one is, private markets, not as much disclosure, less rigorous, it's just less stressful. So that's one big thing. But there's also the consideration, will my IPO be well received? And there, I think you need to hit a certain level of revenue. North of, people have different opinions, call it north of 400. Most of them are there. You also need to hit profitability. Most of them have also gotten there in the last 3 years. But this is the big one, is you need to be growing at above 20%, really ideally above 30%. And that is really, really hard to grow at 30%. And public market comps are somewhere around 16 to 20%, depending on the exact category. But if you're telling a growth story, you've got to be above that. And driving growth is hard. And a lot of these companies are growing at, call it, about 20% a year. And accelerating growth is really hard. Now, Stripe, we talked about 40% year-over-year transaction growth. But they said in their annual letter, don't count on that in the future. So does that sound right to you as the kind of set of logic? Anything that I'm missing?
Yeah, there was something in the Forbes interview that the Plaid founder, Zach, mentioned. I think they were closer to mid-20s, or I don't know if that's something that's rumored. But that mid-20s feels like they need a nudge. Like you want to be at the top end of that range, and certainly before you go public, you want to be showing that growth, and you want to be showing that profitability. You want to be class leading, not sort of doing okay and going to the public markets because you kind of feel like you have to because your investors want out. You want a really strong story, and I think they've got a narrative arc to pull off where they can do that, and it feels like they've started to do it. But yeah, growth is hard versus Ramp talking about they've 2x'd revenue. Brex potentially has done something quite similar in the past 12, 18 months. Now, that is growth that says they don't look like they need to IPO anytime soon because there's so much growth in front of them. But if they did and they could do anything like that, like you could see that being an extremely successful story.
And this is why one of my favorite things to follow is what are the new products that these scale players are launching, because in order to increase that growth from 20 to north of 30%, you have to have a new product, and that new product has to be well received in a big enough market. So we've talked about Stripe Billing hitting $500 million in revenue. Plaid has their identity. Gusto has their embedded payroll. Ramp just has really high product velocity. The core product is similar, but the footprint keeps expanding into other things around banking and treasury. And so that's why I'm following. A, it's just interesting. Like, it's interesting to know, like, what are these products that people are building? But two, the best way to find a company that's going to be a good IPO candidate is they have a new product that's big and driving a lot of growth.
Yeah, the canonical example is Stripe Billing. It's like that's the new growth engine for that company. And what's going to be next? Is it stablecoins? Is it an AI thing? Like, who knows? But they've got, you can almost see.
They have a merchant of record service they're going to start rolling out. I don't know how big that's going to be, but, that's why it's interesting to follow these new products.
Yeah, they've got a lot of candidates. Is it going to be their issuing business? There's so many things.
That's probably a much better candidate, potentially, to be paying attention to.
Let's keep paying attention to all of these companies because they're fascinating. We're in a really interesting time. So, what do you think? Is it going to be next week, or is it going to be a month out? Like, what's your read?
I mean, I don't know why you'd put this out there unless you really want to do it. So it seems to me like they're going to put a really hard, good faith effort at getting it out there pretty soon.
Let's see, man. Let's see. Well, are we going to reconvene when they do and see how it went? I think we should do did the IPO go well?
Did it happen? Could be a very short episode. No.
Mario Gabriel, the generalist, used to do the S1 Club. I think we should start a FinTech S1 Club when that filing drops and just start to kind of really run through it and maybe make.
Maybe we should get our friend Jeff Guinness in here from what is it? Popular FinTech is the name of his.
Yeah, Jeff, come on board. Yeah, let's do that. Let's do that.
Yeah, we'll do if they do it. And when we get this one, I think it'd be fun to do a teardown, and that'll be super interesting. All right, awesome. Until then, I will see you next week at FinTech Meetup.
I'll see you at FinTech Meetup, my friend. Be there or be square.
All right, cheers.